Oh, hi everyone. My name is Rahat Kazmi. Thank you for coming back to my part three of the three videos, which I promise I will deliver. Because basically, purpose of these three videos was to make sure that you guys understand the fundamentals of accounting. Uh, these videos or this course has been designed in such a way that you don't need to be an accountant. You don't have to be from financial background. You could be working in sales, marketing. You could be working in operations. You can be even student. You can even be housewife, and you still will be able to understand this course because it's been very well that easily illustrated here. Okay, so today, guys, we're going to talk about part three. If you have not watched the first part and the second part, I would urge you to go back and watch the please, because that's where you get some information which will be very vital to understand this whole course. In the first course, we talked about bookkeeping, what bookkeeping was, what accounting was, what kind of accounting, what type of accounting is. Basically, we talked about financial accounting, managerial accounting, income tax accounting. Okay, and then in today's episode, we'll be talking about financial reporting. Financial reporting of kind, basically, we'll be talking about the balance sheet and other income statement. But guys, the way time is going, I don't think we'll be able to cover the full part three today. I think part three might have to be made maybe two more parts later on, because they just said I cannot talk to you guys for more than an hour, otherwise it'll just go above your head, and I'd like to make sure that you guys understand it as much you can. So go slowly, as much you guys can understand and digest information. So guys, if you have not subscribed my channel, please I would urge you to go and subscribe my channel. Like the video if you like it, and also please share it, because that's so I'll be encouraged. And by all means, guys, if you have any questions of any kind at all through this course, by all means leave me a note into comments of YouTube video, or you also will have some kind of links to my other social networking channel, for example Instagram, LinkedIn, same time what's Facebook. I got a couple of groups in Facebook as well and pages. So send me a message anywhere, and I'll promise you that I will definitely get back to you. I'll try to make sure if you have anything unclear, I'll make sure that you understand that really well. Okay, so let's start our episode 3. So primary financial statements. So guys, as I said, with time in hand, I'll try to cover the balance sheet only. And guys, by the way, I wish you all the best because living in the UK I realize the COVID-19 is respreading again with the second phase just started and government is thinking maybe a second lockdown or something. And this was my primary reason of starting the videos online, so you guys can benefit who are sitting at home, who are not still working, or maybe still waiting for their employers to open up their offices and stuff. So guys, I wish you all the best no matter where you are. This has been, this coronavirus or COVID-19 pandemic has really basically made everyone suffer financially, economically. Okay, and hopefully you guys go back to work very soon, and go back to your works and go back to earning. Some of you are not earning at all. Okay, this can be a big sort of setback for a lot of us. Okay, so guys, basically let's talk first of all with balance sheet. What is balance sheet? Balance sheet, if I can be very honest, guys, balance sheet is considered an awesome creation of human mind. Human mind, similarly to what Albert Einstein, a German physicist, he has talked about energy. He said energy was equal to mass of the body, or body mass times speed of light times 2 times speed of light squared. Similarly, guys, assets equals liabilities plus owner's equity. This is basically an accounting equation. So accounting equation is considered as important as the formula of energy. Energy equals mc squared to mc squared. So guys, when we talk about left side of equation, on left hand side we got assets, which are very much tangible. We can touch them, etc. But when you talk about right hand side of the equation, there we talk about liabilities and owner's equity. Basically, we need to make sure we understand the assets we have in place. How are the assets purchased? How did we buy assets? How did we acquire the assets? What was the source of financing? How did we buy those assets? That's the main question here. And this question has to be answered in balance sheet. You cannot just buy assets and not record them anywhere. You have to record them somewhere. So guys, you must have also noticed, this video now, my second video in which I have tried to sort of help myself with YouTube live streaming through using a software called OBS, and this has improved already. So I'm also learning. So guys, I'm not saying this. I'm an encyclopedia. I know everything. Of course, I know a lot. I work in industry in financial and accounting roles for a long time. I trained as freelancer and also through my own company for a long time. Trained a lot of professionals throughout Middle East and Europe, in UK, and most of the companies were oil and gas companies, top companies in Middle East, some finance houses. So we have some experience, but of course, same time when I train you guys, I learn as I go along, and also I learn every single day, and it's just learning also takes place when you teach other people. So of course, when I finish the course, finish this video, I'll pick up something, a few things as well, which will be in my mind for a long time. Well, guys, so let's talk about a few more things about balance sheet. The balance sheet, basically what it is. Balance sheet is things you own. We could have our personal balance sheet, we could have our business balance sheet. So, long time ago, more than 7,000 years ago, Mesopotamians, these people, they also were using balance sheet, as we discussed initially in part 1, by talking about their accounting was done through clay tokens. Clay tokens, this is how the farmers will record, for example, the cows, the cattle, and the sheep and everything else, and the weapons they had, or maybe the tools they had. So understanding asset is not rocket science. It's easy. It's easy peasy, as easy it was for Mesopotamians 7,000 years ago. Okay, every time we buy an asset, there's a condition for it. We had to write it down. We need to make sure we record in balance sheet where did we get the money to buy this asset. It has to be recorded. We cannot just buy an asset and then not enter on how we got it. Okay, this is all basically the magic of balance sheet. We had to balance it, and then we need to make sure everything is recorded on every side, so everything is balanced. When we write down the assets, we should also write down the source of financing of that asset. Okay, was the money borrowed? If we borrow the money and we bought it, then of course if money is borrowed, then it becomes a liability. If the money was our own money, the owner's money, then of course this is an asset and this is owner's equity. Okay, if money was invested by the owner, it falls under equity as a source of buying that asset which we bought with owner's money, owner's savings. In the two slides of the accounting equation, the first side and left side is asset, which are, as I said before, they are very much tangible. You can touch them, you can feel them. But on the other side of the second part of the question is, how did we buy the asset? How did we manage to buy them? Let's go through a simple example. Some of you listening to me from any part of the world, you might have some small kids. Some kids may be at toddler age. Let's say you walk home from work and you come to the road, knock on the door, and your toddler, which could be 4 to 5 years old, opens the door for you and then start jumping because they're so happy to see you. You might pick them up, and when you pick them up on your shoulders, you realize that your toddler is holding a 50-pound note. Of course, you might think, okay, 50-pound note is my toddler's asset. Of course, it is an asset, but then you'll also be worried, or you'll also be surprised, and you might even ask questions from your toddler. Okay, honey, okay, my son, my daughter, you got 50 pound in your hand. Where do you get this money from? Where does 50-pound note come from? So guys, similarly, balance sheet works exactly the same way. We buy an asset, we need to find out exactly where did that money come from. Where did we get the money from to buy that asset? It's simple as that. Simple as that, asking a toddler, where did you get 50-pound note from? So definition of assets are resources in business either controlled or owned by the business which will provide future benefits. Okay, so guys, so simple as that. Sometimes we don't buy everything. Sometimes we can lease things. For example, a company car, a company van, depending on the business itself, they want to buy it. You should buy the asset, Of course, yes, you don't have to pay them back, but at the same time, it will depreciate and you lose value on that. If you have lease an asset, and van or something, or a car, you keep paying the lease amount every month, but then of course when the lease is over, this will not become your property, it will go back to the lease provider. Okay, so in other words, resources either owned or controlled by the business, which will provide the future benefit, they are called assets. Okay, let's guys go through some examples of assets. Okay, I'm sure you like to know a bit more what assets are like. Okay, we already given example of a little toddler holding a 50p note. That's an asset. Let's talk about Apple. I'm sure most of you are aware of Apple. Other you might have Apple phone, or you might own a MacBook, or maybe Apple Watch or something. Apple is a big company. Apple balance sheet shows they got lots of cash, and their cash is not a lot of cash. The cash is in billions of dollars, guys. And when the cash is so much, as we all know that we call cash a king. So let's suppose Apple has the king. That basically means that Apple can spend their king in such a way that Apple company will definitely grow in future, will keep growing as long as they have the cash in hand. As long as they got the cash in billions of dollars, they're okay. And cash, guys, as you know, is an asset. Okay, it's considered as a current asset. Then let's talk about accounts receivable, which is also another part of asset, accounts receivable. In this, we can talk about example of American Express, which is a credit card company. American Express, or accounts receivable in American Express, is the biggest asset of the companies like American Express, Mastercard, and Visa. The clients sign the contract. They sign the contract to use the credit card's money, which they given to them. Each credit card would have given you some kind of spending limit. If you start with them initially, they might even give you £500 limit. And then if you keep paying the bills on time, they might even give you £5,000 or maybe even £500,000. And some people who have American Express Gold card, that limit really goes up. Okay, so basically, you have a contract with them, with the credit card company to spend the money. Okay, when you spend the money, you pay it back with expensive interest or APR, which usually is 29% or more. Sometimes even 35%. Can you imagine the profit they make? The profit is huge, guys. Credit card companies like American Express, they make huge profits. And because we get the money from credit cards, at that time we don't feel this is your own money. You don't really care about where the money comes from, where the money is being used. You just feel like a king or queen. You keep spending money, but then when you repay it back, then it could be a little difficulty. Okay, so basically we keep spending the money, then we pay it back with lots of interest, and that lots of interest or profit. This is basically their profit. Okay, Citibank, for example, is known. They have over $1 trillion worth of accounts receivable. So when accounts receivable, guys, is the money people owe them. People owe the company. So lots of customers, millions of customers who owe the money to the credit card companies. They are basically their assets. Okay, they are their current assets. Then let's example of inventories in buildings or fixed and fitting. They're also basically a current asset. Let's example of John Lewis. If you are not living in UK or not, you don't know about John Lewis. John Lewis basically is a luxurious departmental store. They have more or less of stores in the UK, maybe some other parts of Europe. John Lewis basically is very popular in middle class, upper middle class, and rich class in UK. Let's talk about their inventory and buildings. Let's say you visit one of the John Lewis stores. You might go to John Lewis store either by walking if you're nearby, or you might go there by car. The moment you walk into their car park or drive into car park, you basically are standing on the asset. The car park is also their asset. The building, if you look in front of you, the John Lewis building, that building is their asset. When you walk inside the building, you look at the counters, you look at the shelves, you look at the fixed and fittings, you look all the stock they're hanging there, are hanging in the walls, or hanging mostly in the cupboards. Every single thing which you see in the store, they're also their assets. Okay, guys, these are all assets. Okay, so John Lewis, everything from car park to the building to everything is inside the store. They're all part of John Lewis assets. Okay, now let's talk about another example of an airline company like British Airways, for example. Aeroplanes like British Airways, Emirates, Virgin, all their planes are the resources of the airlines, okay, which are owned or controlled. In control, let's say, because sometimes airline may not own their own aeroplane. They might be leasing them, just like we talked about leasing in case of business. Businesses we own, we lease sometime company car or van. So of course, leasing, is not owned by you, but until you have the lease contract, it's owned by you. Then of course, the balance sheet will change. Okay, these resources are the assets which will provide future monetary benefits in the form of providing services to the potential customer. For example, in airline, you have to sort of use aeroplanes to transport customers from one place to other their destinations. So people, they will book the flights, they'll pay the money by credit cards online, or they'll go to travel agents, or maybe they might go to some online agents like lastminute.com or maybe flight scanner, etc. These kind of agents you'll go to. You book the flights in advance, you pay for it, okay, and that basically those resources, aeroplanes, they are used for providing monetary benefit to people or the customers. Customer will use these services of travel by purchasing the flight tickets. So we purchase flight tickets with money in exchange for our services of traveling from one place to other. Okay, guys. Next thing we talk about in balance sheet is liabilities. We talk about assets in detail. Let's talk about liabilities. First of all, let's start with the definition of liabilities. Obligations which may require sacrifice of future economic benefit in the form of transferring assets or providing services. Okay, let me give you a small example. Let's say I do photography as a hobby, and I sell my camera, sell my DSLR, full frame DSLR. I sell to somebody. When I sell to somebody, basically for against that money, okay, and I'm actually giving my my camera away. So I'm deprived of a camera. Basically, that camera has gone to the new customer. Okay, so this is transferring assets. So I'm transferring asset to them against the money. Similarly, if I was to take some pictures of someone and charge them money, I'll be providing services. So because providing services will take time, and as we all know, I'll maybe say sometime as well, that time is money. That time, which is money, which is our asset to provide to that basically to customer. Okay, so obligation which may require sacrifice of future economic benefit in the form of transferring assets, which we talk about products, or providing services. Okay, so let's take example of John Lewis again. Accounts payable, which is one of the major elements in liabilities. Payables, as the word payable shows, that basically means this has to be paid back at some stage in future. Okay, John Lewis, of course, they will not pay everyone, all the suppliers, every single day at the end of the shift. End of the day, okay, come on guys, let's repay you all cash. They will not do that. Okay, I don't think many suppliers will ask John Lewis to pay cash, because John Lewis is such a big supplier. Nobody will dare ask John Lewis to pay cash in advance. So it will be very easy for them to take credit from someone. A company will ask for commitment from John Lewis to pay them back later on. Usually, it could be 4 weeks, 30 days, maybe 2 months, 60 days, etc. So usually, the loan or suppliers will supply the products and services on credit. Okay, so this forms basically an obligation to pay. John Lewis will have to record the purchases which they bought on credit as an asset, and also towards the liabilities equal to the purchase price. Basically, whatever they bought, whatever the products and services. Let's say John Lewis buys computer equipment. They also buy computers, cameras, home furnishing, clothes, machinery, etc. So they buy a lot of things. So everything they buy on credit, that is still an asset, but they still have to record amount they spend on asset into liabilities, because they need to pay it back to those suppliers. That's why it becomes accounts payable. Okay guys, next example is about wages payable. Okay, wages, of course, wages are not paid in advance to anyone. Okay, let's take example of British Airways. British Airways, as we know, wages are always paid, guys, in arrears, and most companies will pay wages to you monthly, especially to people who are, let's say, shift leaders, supervisors, line managers, other departments. C-level people, even all of them, they will get paid on monthly basis. Some companies, however, will have some bi-weekly payroll. Okay, and when you talk about service companies, for example, catering services, catering where a lot of casual staff work, they might even do weekly payroll. But weekly payroll can be a headache because you have to keep paying people every single week. You have to do all the homework again, all the timesheets putting together, and preparing the timesheets and preparing counting number of hours they worked and putting all the sort of monies advisors through the banks, and then preparing keep printing all the wage slips, and doing P45. I see most of the time is bi-weekly or monthly payroll. Okay, so British Airways is not going to gather like everyone like John Lewis and ask them, okay, fine, who work today, come round, let's get you paying by cash today. So they will not do that. It's a big company. British Airways will pay most people by monthly wages. Okay, so by every single person who goes to work in British Airways, let's say 31 days a month, let's say from day 1 to day 30, every time they come back home from shift, they have earned the money. Okay, but they're not got paid for it. Of course, they earn the money because the transaction has completed. They actually have committed to work there. They came home. They've done the work for the day. So they have earned the revenue, basically earned the money, basically, but they didn't get paid until less than 31st of the month. Okay, so this with accounts wages payable, which is another form of liability. Guys, next form of liability is taxes payable. Let me go through, an example which will be a very complex tax example, but I'll try to make it simple. British Petroleum or any other petroleum company which will be operating. For example, British Petroleum operates in most countries in the world. For example, they will have their other drilling stations. Maybe they might have their warehouses. They might have their ships everywhere. They might have some other petrol stations in North America, South America, Middle East, Europe, Africa at the same time. So guys, basically they will have, because they're operating in different countries, that basically means that their tax laws are also different to them in different countries. They'll be dealing with taxes like property tax, income tax, sales tax, import, export tax, all kind of taxes they will have to deal with in order to start do business there. So they'll have to go through different laws, regulations of each country. So their tax department could become quite complex. Okay, so like wages payable, BP will not pay the taxman cash at the end of the day. They will have to pay the tax through their tax returns, which are done through balance sheet, guys. Okay, which basically means they need to record every single tax liability for each accounting period, for each country, each regulation of the tax law. Okay, so this is how they need to record it. So tax payable is a liability in balance sheet. Okay, now let's talk about another liability. Usually we know that liabilities are short-term liability and long-term liability. Short-term liability, when we talk about liability will be maybe bank's overdraft. Okay, this could be maybe month, 2 months, 3 months. Okay, when we talk about short-term loans, it could be up to a year to pay back. Anything about 2 to 5 years is really considered long-term liability, or maybe up to, if you get a really long-term loan. Sometimes we get equity loan from long-term lenders. It could go up to maybe 15 to 25 years time. But that many of you might have heard, that there's some loans have even gone to 100 years by issuing bonds. And one example of them, is Disney, Walt Disney. Okay, Disney company and Coca-Cola, they have issued 100 years bonds in the past. Okay, countries such as Argentina, Austria, and Mexico have issued 100-year bonds too. Okay, why on earth would someone give 100-year bond, 100-year loan to someone when we know that we will not live that long? Not many people would live 100 years old. Even one person is 100 years old. I don't know if he can think straight at that time, or their brain is working properly. But look at this, guys. Some companies are not all opened yesterday. Companies have been running for centuries. Some of them. Maybe our grandfather or somebody's grandfather has started a business, a company. It was passed on to your father, then it passed on to yourself, and now you plan to pass on to your kids and your grandkids. So in that case, you should look after the welfare of the business. You will consider 100 years bond as well, because even the similar example of taking a mortgage on the house. Let's say you want to buy a home for £300,000 and you managed to save £50,000 and you paid that as deposit. So you took a loan from the bank or building society for 15 to 25 years time, and this is basically your mortgage. So can you imagine if you paid the loan £250,000 for 25 years time? I'm sure, very roughly speaking, you might be paying at least £500,000 or maybe £600,000 for the loan, which was only £250,000 if you had paid cash, if you used your own money. So can you imagine if you had used a bond for 100 years, how expensive that would be? But people are really relaxed because it's 100 years. It's 1 century to pay it back, so it's not really a big deal. So you keep paying back. You use lots of money for 100 years. That's also a big advantage. But in the case of Disney, Walt Disney, 100 years bond, which issued in 1993, it matures, expires in 2093. But in the contract they had, the clause was, they can start paying back after 30 years time. That means in 2023. So if they pay the whole loan back in 30 years time or 35 years time, the cost of the loan, cost of finance will become a lot cheaper as compared to if they had paid the whole loan back in 100 years time. Okay. All right. Let's take another form of liability, which is considered as unearned revenue. Okay. Let's take example of British Airways again. Does British Airways or any airline, guys, you might have traveled with, in Europe, we have most airlines are British Airways, Ryanair, EasyJet, other maybe SAS, Lufthansa, Dutch airline. Maybe if you go to Middle East and you talk about maybe Gulf Airline or Emirates and Etihad Airline, or if you go to Atlantic, you might have got United Airline and Virgin Airlines, etc. So all these airlines you might have traveled with. Okay, have you ever traveled, guys, by not planning a flight in advance? Have you ever traveled by an airline where you have managed to travel? You booked a flight, only made a booking, you were given a ticket, you went on the route, on the trip, you came back, then you paid them cash at the airport, or you paid them credit card, with credit card when you came back. Or you might have paid them after 1 month of your travel time. I don't know. I could never do that. If you have, please let me know, send me a message. But I don't think most of you will agree, that doesn't happen in airlines. Airlines would like to collect some money in advance before you travel, okay? So your advance payments for a service which you have not received yet, okay? It becomes their obligation, it becomes the airline's obligation or liability in their balance sheet. So they are bound to let you fly in one of their planes, depending on your destination, depending on your dates of booking, when you like to go. They had to provide that flight back to you, the journey back to you, to fulfill their liabilities. Okay, so because most people will book flights in advance, sometime a year in advance, because if you book flights only a week in advance, that could be quite expensive and you may not be able to afford it. But if you like to go with families, most people book the flights in advance. Let's take example of United Airlines, guys. United Airlines is believed they have collected more than $3.4 billion from people, and they have not provided flights yet. So guys, can I give you a small example of, I really had a bad experience recently. My wife wanted to go to United States by United Airlines. She booked the flights back in March. So she has some family in New York, some family in California. So basically, she was to go to London, from London to New York first, and from other family from there to go to California. In March, the flight was cancelled by airline. They said, you can't travel now because the American government had started the lockdown. So she was not given the money back, but she was given a credit note. Okay, now after so many months, because life was open in Britain again, in most European countries, so she decided to go back to the same trip again, discuss with family. So they made a plan, let's go back and start the holiday again. So before she does that, she sort of contacts the airline. Airline books her flight. When she books her flights, no window pops up on the airline website. No email is received by airline, that can you travel, are you eligible to travel America or not, or what conditions. So airline books the flight as normal, no hesitation, no issues. And then she sends the ESET application, which is online visa application for America. So if you're living in Europe with European passport, you can apply visa online, which basically, if you fill a form online regarding your passport number, European passport number, date of birth, etc., your date of issue, date of expiry of the passport, what your purpose of travel is, and then you send it across, and they might have history of your passport already, and then passport will be your visa will be approved, and you send back approval by airline, so by e-ticket or by email. You print that out, take the airport, and that's your confirmation that your visa has been authorized. So it's not the same as when you're applying for visa from Pakistan, India, or Bangladesh, when you need to set up flights through FedEx, etc. It takes months, and then you have to apply lots of bank statements together and all that to get the visa. So she applies the visa online, ESET visa, and that also approved, no problem. So I wake up 6 in the morning to drop her to the airport. She go to Heathrow Airport and wait outside in the car park. And minutes later she said, no, please don't go back. I have a problem here. So what the problem was, she goes to the airline counter. They said, no, madam, you need to go and see the immigration officer first. I don't know if you guys are aware, but if you go to America from Europe, most airports will have the American Immigration Center at the airport. So they kind of own a whole wing at the airports. So they do immigration in the sort of start of the country, starting country instead of the destination country, to save the money in case they have to send you back, they want to deport you. So instead of deporting or paying money for deportation, they don't let you go to start with. So she goes to see the immigration officer, and he says, madam, you're going to America. Why are you going to America? Are you not aware that we have lockdown since March? He said, really? Since March? Nothing has changed? No. He said, in case if nothing has changed, then why the hell did you not guys inform me? I applied for visa online. You guys sent me approval for visa. I applied for a ticket, to buy a ticket from your United Airlines. No pop-up came up. No email was received to me. No one said to me I can't go. No, you're saying to me, no, I can't go. I had to be immediate family member, like simple. I should be someone's daughter, maybe someone's mom, wife, etc. I suppose. So these are the only conditions I can go. So why the hell was I not told? So I'm sorry, madam, but this is between you and your airline. So can you imagine? Are you not surprised why United Airlines has collected $3.4 billion of people and have not provided flights yet? This is how they do it. They could have simply sent a notification to my wife. No, we can't travel at the moment, madam. You're not allowed to go at this stage. Flights are open, but they wanted to increase the cash flow. So they took some money just in case. No, of course, they will either give another credit note, or they will have to refund. Even the refund, it will still take a few months. So the cash flow will be rich for a few months. On the other hand, my wife's cash flow will be poor. Of course, she has spent money. Her cash flow will be short. So this is what airlines do, guys, and this is basically example of unearned revenue. So they have taken the money, but not given the flights yet, or those transportation yet. They have to do it, okay? Otherwise, their liability will not be fulfilled. So let's talk about no owner's equity, okay? Another form of balance sheet. First of all, let's define what owner's equity is, guys. Amount the owners originally invested in the business and the profit they have left in the business, ownership interest in the business, in the company, in company assets. Basically, I mean that the money the owner spent initially in the business to start the business, and then when they made the profits, instead of taking all the profits out in the form of dividends, they reinvested some money in the business, which is known as retained earning, and this basically the profits respent in the business again. This increases the interest of owners in the company's assets. Let's say you have more than one owners of the business. Whoever will invest more money in the business, their interest in business assets will go up, will go more than other second party. So guys, generally speaking, there are two ways to buy assets for a business. You can either borrow the money from somebody, from a bank, billing society, friends, family, etc., and this becomes a liability. Okay, you have to pay it back. Our owner will invest money from their own savings. This will become owner's equity. Owner might have savings, they might have income from another business or maybe another job somewhere, and they decided to set up, invested money in the business they owned to acquire, maybe more assets better buildings to enhance their operations. So maybe buy some extra stock, maybe add another product line in the business. So this investment is known as paid in capital. This has few names, guys. Here you will know that owner's equity has few names. It's known as paid in capital, capital stock, capital contribution. So they're all basically names of owner's equity. This is one form of investing. Okay, let's talk about some examples of owner's equity, guys. And another way of investing is when the business generates the income, makes profits. Obviously, income and profit is owned by the owner. Of course, owner who owns the business. Income and profits are all owned by them. It's up to owner. No, owner, if they like, they can earn the money, spend the money. They can spend maybe all the money. It's their money. If they spend all the money, this is talk about. This is called dividends. If they spend the money, if they don't spend all the money, and they're wise enough, they might spend some money, treat themselves, maybe buy themselves a nice luxury sports car, maybe go on a nice luxurious holiday in a yacht somewhere, or do something else, sort of crazy. But if they're clever people, they're future thinkers, they might reinvest some of the money into the business. Okay, so when they reinvest some money in the business, this is called basically retained earnings. Okay, and so money they take out from the business to invest on themselves or pay themselves, they're called dividends. Okay, when the profits are reused in the business by the owners, this sort of owner's equity is known as retained earnings. This is another form of financing a business, guys. Financing a business. Because as I explained before, we could not cover all the income, what you call it, the financial statements. We only been able to cover balance sheet. I'm sure you guys all would have been so much tired. Okay, and if I can ask you guys, if you have any question at all about this lecture, guys, please feel free to leave a comment for me, send me a note on any of the links you have seen on social media. You can contact me on Instagram, Facebook, LinkedIn, etc., or send me an email. I'll be happy to answer the question to you. At the same time, guys, I will also urge you guys to subscribe to my channel, because then you can see my next videos as soon as possible. As you probably have seen my channel, I've not been recording videos for a long time. It's only because I've been so busy in corporate training last few years. But since lockdown, I didn't go anywhere. Didn't travel anywhere. So more time in hand. I'm preparing courses by the same time. I thought this is my gift to guys who are at home, sort of in lockdown or quarantine, trying to sort of save themselves, traveling anywhere. This is sort of my gift to you guys. So hopefully I'll see you all guys in the next videos. So any questions, please feel free to contact me, guys, and feel free to share and comment. All right, take good care, guys, and I'll see you all, and please stay safe. All the best, guys. Thank you very much. Take care.